Hello, everyone. Sorry for the late start. A few little technical details, as we tend to get on these things. Just hold on a second while I find the presentation and the risk warning, and then we'll get started. Okay, so welcome to this week's Market Outlook. We do this every Wednesday at 12:30, and it's a quick look at the major markets, what's going on, where the opportunities might be, that sort of stuff to keep an eye on in the days ahead. I'll just put the risk warning up before we start, and then we'll get going. So there's our risk warning. There's been quite a lot going on this week. It's something of a quiet start, but we did see stock markets bounce back in the US yesterday. So we saw a little bit of strength there. And also the price of oil rose a couple of dollars yesterday. So that was something of a move that we had there. We'll take a look at those markets in a bit more detail. I did put up a link yesterday on our YouTube channel looking at the DAX. I think the DAX, the German index, is an interesting one at the moment, given the levels it's at. It's back to its lowest levels since April. So we'll take a look at that in a bit more detail as well. But let's get started. Let's just bring up the trading platform. I think we'll start off with pound US dollar. As ever, it feels like every day there's a bit of sort of Brexit chatter that goes on at the moment. You know, negotiations progressing, not progressing, this sort of thing. But we have seen something of a rally for the pound US dollar. Let me just make this full screen and zoom it in. So we had this massive decline from about 143 in April. Down briefly below 127, but we have seen this recover. We've added some drawing tools this week, so let me just pick up on that from here. So if you're using our platform, you bring up the drawing tools from this button here, show drawing panel, and it brings all this various stuff in down the bottom. So this is the recovery that we've got going on at the moment. If I just pick this up from down here, it looks like something like that. So it is the most sustainable recovery we've seen in pound US dollar since that weakness in April. Yesterday, it moved very briefly to its best level for just over a month. And I think the bias is still definitely up for now, pound US dollar. You know, we do get sort of positive, negative Brexit news coming out, but it does feel as if there's the appetite to be a buyer on dips. But I think we've still got to be a little bit wary about this sort of latest leg of the downtrend, looking something like that. So I think if we just zoom in on like these converging trends at the moment, I think 130.50 to 131 looks to be the level to watch, I think, for pound US dollar. If we can crack that sort of area, it does offer some hope, I think, that finally this major weakness that we've seen is coming to an end. You can see how it's had a few goes, you know, late August, 130.50, yesterday briefly above 130.50, and it's coming off today. So I think 130.50, 131 is the area to watch. But for me, it's a market where the dips are buying opportunities. Let's just flip this over to an hourly just to see this in a bit more detail. There we go. So we can see the recovery off those lows. We had a bit of support yesterday, 129.60. So it pushed out to those 1 month plus highs, but then got clobbered, came back down, but we did see buyers come in at 129.60. Interestingly, it's come back down to that sort of area again today, and we're seeing a little bit of first signs of strength coming in. So I think going into this afternoon, 129.60 could be a level to watch. But below that, you know, we've got support at 129, trend support 128.20, bigger support 127.80. So you know, it all hinges on this 130.50, 130.100 level getting broken. But even if it gets knocked back from here, I think we've still got support levels to prop the price up. So let's see what happens. But for me, I think maybe it'd favour another go at that sort of 130.100 levels from where we are now. We'll see what this afternoon brings. If we take a look at the euro, it's a bit of a different story. Euro dollar. Let's just click that in the spotlight. That was me playing around with some of the drawing tools this week. I normally don't have 1,000,001 lines on my chart. Let's just get rid of these. There you go. But you can see you can draw arrows. You can do Elliott wave count. I'm not a massive fan of Elliott wave, but you can do Elliott wave counts as well. Triangles, Andrew's pitchfork, all that sort of stuff. Let's just get rid of these. There we go. But euro dollar has been pretty boring for a couple of weeks now. So we had this break. Hang on, let's get rid of that one. We had this break down to 113. This was the lowest level since June of last year. The market has squeezed back up. But for me, you know, we've still got big resistance at 118, 118.50. So it's maybe not too surprising we've seen the price roll over again. So for me, it's hard to get too excited about any major upside in euro US dollar until we see these old highs broken. So I'd be tempted, even if we got another squeeze up towards sort of 117.50, to be a seller. Saying all that, I think, but for the short term, we've got a good level on the downside. You know, we've seen, going back to the third week of August. Let's just pick that up. This sort of area here. So it's just ahead of 115. So this 115.30 level has done a reasonable job of holding the market up. So we're trading at 115.77 at the moment. It did come down to it. What was that? Earlier in the week on Monday, and it held. Got a half decent bounce. So in the short term, you know, weakness to 115 looks like a buying opportunity, but it doesn't change that bigger picture view. And the bigger picture view, you know, is I think still that the risk is if we see 115 break, we're going to go and visit those old 113 lows. But saying all that, it has been a somewhat quiet couple of weeks for euro dollar. Pound US dollar has been the much more interesting market. Let's take a look at stock markets. I'm going to start with the DAX for a change because I think the DAX is interesting. I've traded this bit this week and really just looking at some of the big levels. Let me just start off first of all with the big picture view for the DAX. Let's just pick this up in here so we've got the full screen view. The reason I think this is interesting, this is going back to August of last year. So August 2 years ago, sorry, 2016. And what I'm interested in is what's been happening really since August of 2017. We saw the market sell off from June to August last year. But, you know, the buyers came in around about 11,900. We saw buyers come in, okay, the market blipped below it there. And then it's pushed out to all-time highs. Then, in line with other stock markets, we had that big sell-off beginning of the year. So late January, early Feb, sparked off by some volatility products in the US. We saw this market under pressure and stock markets fall. But over the last few months, if you we'll look at the S&P in a minute, the US market, the markets have recovered. And in the US, the S&P has pushed out to fresh all-time highs. But look what the DAX has done. The DAX slipped lower in March anyway. So when everything else was still holding above those lows, the DAX managed to move to fresh lows, did get a move on March into May, but again, through much of the summer has been going in the opposite direction to US markets. So why I think it's interesting down here, we're back down to levels that in August 2017, March 2018, we did see the buyers come back in. So if the DAX is going to recover from anywhere, then I think 11,700 to 11,900 is the zone to watch. That's a 200-point range, but the DAX, you know, can easily move 100 points just on a normal day. So it's actually not that big a range. So I think it's interesting to watch down here. It's still weak, as is my voice this afternoon. It's still weak. We did have an up day yesterday, but it sold off nearly every day last week. You know, so it's a market that is still under some pressure. But adding to the case that maybe we should see it turn around here, we have this old level of big support, these two support zones coming in. And we're pretty oversold. This is the most oversold the market's been since stock markets fell off a cliff in February. So for fans of the RSI, this is a 10-day RSI down here. So let's see what happens. I'm short at the moment. I went short this morning at 12,000. So I still think it's going to have another look lower from where we are now. But I think it's an interesting market to watch through September to see if we do see some sort of strength come back in from these levels from the DAX. So I think that's maybe, because it's been doing completely the opposite to other stock markets, it maybe makes it one of the more interesting stock markets at the moment to see what happens down at the levels. But if we flip it over to the hourlies, we did have, or even maybe a shorter term now, let's go 15-minute chart. We did have a bit of a move this morning up to here, up to sort of 12,040. briefly through the highs of the day before, but it's turned around again. So it's really struggling to hold on to any rallies. So yeah, we'll see. We'll see what happens with the DAX. But for now, I think in the short term, still weak. But overall, let's see. Let's see what happens down at these support levels. I'm just getting a message of somebody's having a bit of problem getting in. So let me just reply. Hang on a second. So the DAX is there. Let's go and take a look at the S&P 500. So the broader US stock market. It had been under some pressure. Let's just pick this up. For the last, for the last few days or so, been under a little bit of pressure, but it sort of bounced back yesterday. Let me just move this across so we can see it. So we had seen, if we zoom in on these, on the last couple of weeks or so. So this is coming off all-time highs. So we hit all-time highs around about 29.20. Oh, hang on a second. Oh, I can't do that. Okay. So we hit all-time highs up at 29.20. The market sells off towards 28.65, and we did get the big move yesterday. So I think at the moment this doesn't really change that trend that we've been in now since April. Let me just pick up on that. So coming off these lows from down here up to here, the big trend on the S&P still very much intact. It would take a much larger sell-off from these sort of levels through these old lows at 27.90 from August to change that trend. So I think the S&P 500 still very much in sort of buy the dips mode. And if we flip it over to an hourly chart, some of the short-term levels to watch this afternoon, I think clearly the lows from the end of last week, beginning of this week, have done a good job. I mean, yesterday we sort of spiked down into that just below 28.70 area on the S&P. We've seen the buyers come back up. And it's a reasonably bullish start from today. We'll see how it trades today, but I think any weakness back towards those lows from yesterday looks to be a buying opportunity. It looks like we've broken out of that downtrend that had been in place over the last week or so, and that big picture trend is still up. You know, it's a market where we've seen it recover incredibly well and set fresh all-time highs. Let's just put an RSI on here as well, because I'm guessing it's probably going to be pretty much overbought. Here we go. We've got a 10-day RSI. That was sort of in the middle of the range. Let's just get rid of the 14. There we go. In the middle of the range. So have a look on the hourly chart and see how stretched it looks. Okay, went a little bit overbought on that move yesterday. So maybe we've got a bit of unwinding to do today. But I think the level to watch if we're trading it this afternoon, 28.65 through to 28.70. That's where we've seen the buyers come back in. But you can see why, I think that the DAX is an interesting one. Look at the S&P over, the last 5 months or so, just broadly going up. And then we take a look at the DAX over the same sort of periods. And, it's just pretty much sideways, up for a bit, and then spending much of the time going down. So I think it's an interesting market to keep an eye on and compare it with the DAX. Right, we'll start wrapping things up. We have had a few technical glitches today. I'm not quite sure why, but we'll wrap this up. We'll start looking at gold, which is a bit of a dull market still, and we'll finish on oil, which I think is an interesting market, again, because of the moves we've seen. So let's just flip this over to a daily chart for the price of gold. There we go, and you can see, so if we zoom in on what's been going on the last few weeks, it's pretty flat. It's trading now where it was the 24th of August. So I don't think that big downtrend for gold has gone. If we pick up on the highs from up here, it looks something like that. It needs to break through at least 1230 to shake off that weakness. So maybe in the short term, the risk is for the price of gold to slip back towards 1160 again, but it's just pretty dull trading. I suppose if you really wanted it to trade it, there are some levels to watch on the short-term chart. Going back to 24th of August, sort of ahead of 1180, this 1183 lows. We did see it push down to 1187 yesterday. So let's see what happens. But in the big picture view, that trend still very much down. Maybe some of the downward momentum has gone now, but until it breaks 1230, it doesn't really change that bigger picture trend for now. So a little bit dull, the price of gold. And finally, oil. Let's just add that into our spotlight and put it in here. Here we go. I think this is in. There's the big move yesterday from $67.50. But let's just have a look at the daily picture for oil. We have, of course, this afternoon the crude oil inventories out at I think 3:30 this afternoon. It's the weekly report from the US about how much oil is stockpiled. So we can normally expect to see some volatility off the price of oil there. But we're back up just below $70. It's really struggled with $70 over the past two months or so. Even though we've had that trend off those lows, let's just pick up on that from last summer. Hang on a second, where are we? Looking something like that. It has sort of fallen out of that trend with the lack of momentum we've seen over the last couple of months. But for me, the big level is still very much these lows from back here ahead of $63. I think it's only if it starts to break below there, maybe we've got a potential head and shoulders there. For fans of head and shoulders, if we start to break below 63, then maybe it looks like that finally a top is in place. But at the moment, it's just really choppy. I think there are trading opportunities. If we look on the hourlies, we did have, when it sold off September the 6th down to 68.80, spiked below it on the 7th of September just by about 10 cents or so, then held again earlier this week, and we've seen the market lift up. So maybe we'll see it squeeze a little bit higher, but it's just always struggled when it's been above 70. So I think it's a pretty volatile market again this week, the price of oil. And maybe there's a bit more left on the upside, but it wouldn't be surprising to see it start to roll over again in the second half of September. But as I say, I think the big level to watch are these lows at $63 a barrel. If it goes below there, I think we can start looking for a much deeper sell-off. So I think in summary, what have we got coming up? We've got the oil inventories this afternoon. We've got interest rate decision tomorrow from the Bank of England and the European Central Bank. No changes expected as usual there. So interest rates expected to stay on hold tomorrow, but we could see some volatility for the euro and the pound off the back of that. But for me at the moment, maybe the DAX is the more interesting market, because it's pulled back to these 5-month lows. They have been a major turning point in the past. It's still weak at the moment, but it's maybe an interesting market to watch throughout September to see if we do finally see a change of sentiment. We'll wrap things up there. As usual, to find out more about the company, if you go to Capital.com, you can open an account, open a demo account. For those of you who are clients, I think we do these promotions now and again with zero spreads. And I think there's one going out tonight for pound US dollar, unless I'm mistaken, about 7 o'clock UK time. So you can trade with zero spread for an hour if you're a client. If you're not a client, if you open an account, you'll be set up for tonight. Any other questions about today, drop me an email, david.jones@capital.com. And you can follow me on Twitter @JonesTheMarkets. So thanks for coming along today. Sorry for the slight delayed start and a few problems. And we'll do it all again next Wednesday.